Welcome to Stocks in Translation. I'm Jared Blickery, along with the voice of the people, Sydney Freed. Thank you for joining us. And a few quick notes. Please go ahead and like, subscribe, and comment on Stocks in Translation on Spotify, Amazon, Apple Music, YouTube, or your podcast platform of choice. Today, we are welcoming Dimitri Kofinas. He is a host of the Hidden Forces podcast and a veteran of radio and TV. Full disclosure, Dimitri was the first to fly me onto TV way back in 2012. It is great to see you here today. And today, we are going to be talking about the tectonic shifts in the financial world that are underway right now. Our phrase of the day, financial nihilism. It's a phrase Dimitri here coined and has been using since 2020. Is there more to finance than ever higher prices? And this episode brought to you by the number 1.1 trillion. That's the total amount of dollar-denominated debt of mainland China. Why the US dollar isn't going anywhere as a global reserve currency anytime soon. Now, regardless of the media hype, Dimitri, this has been a really interesting time. Over the last month, we've seen some wild market movements, and I've been asking every guest, what are you making of the financial markets overall right now?
Well, you and I were talking about crypto earlier in the context of financial nihilism, and that's one area where I think you really see this. And, again, you mentioned that we've known each other for a long time. I think also the 2008 financial crisis was very...
It permanently lives in my psyche.
Totally. Like, we are kids of that era. And I think a lot of people were influenced by not the 2008 financial crisis itself as much as the aftermath, the lack of accountability, the blowing out of the Fed balance sheet, the ultra-low interest rates for years and years. And I think that bred this kind of what I describe as financial nihilism, and crypto is sort of the epicenter of that.
I want to get to the definition here. So let's do that first, and then we can get to all the conundrums of this concept. So financial nihilism, and this is a big term, and as I mentioned, I think you first used it in a 2020 pre-pandemic podcast with Ben Hunt, Grant Williams, and this is the definition. Financial nihilism is a belief that financial planning, investing, or wealth building is meaningless or futile. And we've seen this. In its most basic form, financial nihilism views the objects of speculation as intrinsically worthless.
So I would say, I'm not sure who sort of added that initial part. My definition of financial nihilism...
It was AI.
Has always been, yeah, I know. Apparently it was ChatGPT. ChatGPT also in the initial phases thought that I worked at Elevation Partners or something like that. I remember, which is not true, by the way. Not that there's anything wrong with that. My definition of financial nihilism, so I coined the phrase in 2019, and you're correct. I used it first time in a podcast titled, I think, Financial Nihilism or Market Nihilism and Price Discovery in a World Where Nothing Matters. And my definition of financial nihilism is more or less an investment philosophy that treats the objects of speculation as though they were intrinsically worthless. Now, I'm sure you're familiar with Karl Popper's or George Soros's building on Karl Popper's theories of reflexivity, and that there's a relationship between price and value.
Sid?
No, I'm not familiar. I was going to chime in.
She's actually speaking for me a little bit too.
Yeah, but so that sort of informed my view of it, which was to say that I've always understood that there's a discrepancy or a disconnect between price and value, and that markets are about finding the intersection between those 2 points and trying to buy below at a price below value, and eventually the thing appreciates in line with expectations. Or with underlying value. In the case, when we think of a world that has become increasingly nihilistic in terms of its investment framework, we think of a world which dispenses with one half of that ratio. It dispenses with the value proposition, and everything becomes about the price. And in some ways, it's sort of like, and it's like art. But what drives price at that point becomes essentially momentum and narrative. And I think that's another phrase that I used around the similar era was narrative investing. And we saw this again in crypto. And I think, again, the reason why crypto has been the epicenter or such a trailblazer in this regard, because we've seen this with Tesla too. We've seen this with other stocks. Tesla's not the perfect example of this because there is an underlying value. But we've seen it with GameStop. We've seen it with even Hertz, which is a closer analog, which went bankrupt and the thing went up. And I think, the term I've also used is narrative investing. And we have seen a kind of self-awareness in the internet age around narratives that didn't exist when we were younger, where people really focus in on the narrative. What's the narrative? Let's get a narrative going. You see it in all these Discord channels, Telegram channels, Reddit, 4chan, et cetera, where people focus on telling the story. They know in a cynical sort of sense that they're telling it. It doesn't matter. And as long as we can get more people to believe it, even if they know it's also BS, we all click our heels 3 times and we kind of send the thing up. And so markets have become a casino, and and you've seen that casinification of markets permeate more and more asset classes. But the epicenter of that, I think, is crypto. Not a knock against crypto. It's not a thing about what is crypto itself.
You're going to get a lot of letters off this.
I'm sure I will.
But Sid,
Yeah.
I want to be clear, though. Are you saying financial nihilism is a good thing or a bad thing?
I think it's a bad thing.
Okay.
I think it's a bad thing because the reason that capitalism works, both in theory and in practice, is because there is a reward for speculation that is tied to the fundamental productive capacity of the economy.
so in other words, I think what you're saying is we're getting too much away from value and we're just focusing on price. Is price going up? That's all we care about.
Yeah.
I mean, to be succinct there. And we've seen this a lot, but you mentioned markets as a casino. Were you just talking about crypto, or are you talking about the capital markets as we know them, stocks and bonds?
Obviously, crypto is the area where you see this more than anywhere else.
And it's a loaded term too, casino. So just kind of elaborate on what you're saying.
I really feel like this latest pump that we've seen crypto in the altcoins, everything below, again, like Bitcoin has proven its value proposition as the biggest, it has the biggest network effect. So it makes sense from the store of value standpoint. We can get into the nitty gritty of it, but it makes sense from that point of view. Further down, and let's just put Ethereum aside, what we have is basically an incredibly large market cap for a paltry number of apps that do anything other than, work to be basically financial assets. This is very different than if you think about, this is now we're in year 16, right? I mean, Bitcoin came out in the fall of 2008, at least the Bitcoin white paper. Ethereum was launched, I think it was in 2014 officially.
Sounds about right.
And so what we are in 16 years of this. Now, if you remember 1991, was it when Netscape launched? Or I think
that was about
the
the same
public.
time. I mean, and that was when we were getting the first ETFs. So we're talking about financialization. There's another trend that started.
Yeah, so we had 10 years, not even 10 years of apps. Google, platforms, Google, search engines, Yahoo right here, still around.
Yeah, we are.
eBay, Amazon. You had actual applications and services and things like this that were web-based, that had value, that were adding value before they even went public. Google didn't go public until I think 2004, but we were using it in high school to actually do stuff. That isn't the case here. And I think, again, there's one more thing that if we have time, we can talk about it, but I think also when we think about crypto as a category, not really to focus too much on it, it was the merger of a core part of it was crowdsourcing, and the idea was that absent the government, DoD, DARPANET, ARPANET, the universities, absent that funding to help provide the seed capital to launch the next internet revolution, with the equivalent of the internet revolution, we'll crowdsource that to the marketplace. But what's happened is because of the easy exit liquidity in crypto, that's what makes it especially nihilistic. It's like you can get in and get out. It's
too easy to get in and out.
The incentives don't align. And that's happened more and more across other areas of the marketplace.
So how do investors kind of cut through this financial nihilism and find value?
You embrace it.
Oh, so
You have to embrace
That's too
it.
easy.
you sound like you're sitting by the poolside here. You're just sipping and watching
selling
the
me
world
something.
crumble. You really just embrace it.
I have to say, it's not far from the truth. I mean, it's not entirely true, obviously. But there is a part. I've sort of been that guy railing against the clouds as the Simpsons character, and I feel like in general, there does seem to be a decadence in our society and a kind of corruption in our politics and in our markets that wasn't there to this extent years ago.
Do you think it was there, just not realized, or it's prevalent?
I think it was more contained. I think that it has spread. And
there's usually a pendulum, though. So if it's gone too far this way, might we expect, there's going to be a movement in the opposite?
That's a good question. Sometimes there's no. It just goes off and then the cord breaks and the ball goes flying.
Wow. Okay, that's true too.
Yeah.
Sometimes. I don't really have a follow-up to that. So
I have a non-market
please go for
one.
it.
When you're talking about this, I'm starting to think about fast fashion as something more about price and less about value. What do you think about
Hot
that?
topic.
So fast fashion is what exactly?
I just think like that's all price based. Like I'm buying
cheap
50
goods that you
things, the
buy at
cheap
a clothing
goods.
store, you wear it twice, and it's kind of
Exactly.
disintegrates.
I don't know. It's just a thought that came to mind when we talk about non-investing.
Yeah, I'd probably need more of an explanation of what fast fashion is so that I actually make a
Like really cheap really cheap stuff, so it entices people. Like, oh, the shirt is $8.99,
But it doesn't survive
last.
5 washes.
No value. Yeah, exactly.
Yeah, I mean, I think that the analog that comes to mind there is like kind of like ICOs or things that are just kind of thrown in the crypto space out of nowhere that are suddenly pumped. They get exciting because they have a low market cap. No one owns them. We can pump this thing. Like I've seen that. I don't know if that's a good example, but I think generally fashion and better so art. There was a documentary I saw years ago called I think The Price of Nothing or something like that. It was about art. It was about the art world and like
Which is becoming tokenized now.
there you go. And like more and more of the world kind of resembles that signifier. More and more of the financial landscape becomes associated with the signifier, not with the signified.
We're going to pause right here, do a really quick break. But coming up, we're going to be talking about the demise of the dollar. Spoiler alert, not even close to any time soon. And a look at the very future of humanity on today's Who Wore It Better? All right, we are back, and this episode is brought to you by the number 1.1 trillion. That is dollars, the total dollar-denominated debt by mainland China. So-called external debt because they're not borrowing in their home currency. They're borrowing in over $1 trillion that has to be repaid in dollars. And this is in light of rumors circulating, Dimitri, about a new global reserve currency centered around the China-Russia axis, the so-called BRICS. But the point of highlighting these debt figures is that the world is neck deep in dollars, heavily invested. Global reserve currencies are not made overnight. And so the world as it is couldn't just flip a switch and turn off the dollar spigot.
No, this is a great, because there's so many misconceptions around the dollar. One of them, generally speaking, is that the conversations about the demise of the dollar are really a sort of way of materializing a roving anxiety about the future of the American economy, the future of American power, American empire.
But not necessarily linked with the dollar there.
Right. There's
especially on a short-term basis.
Right. It's the signifier. It's the thing that people are focused on. But to the extent that the dollar, we're going to have a conversation about the future of the dollar. I think that, one of the main misconceptions about the dollar that people have is that they think of it as this thing that Uncle Sam generates and that the rest of the world takes or is forced to take. And in fact, the dollar is arguably the most decentralized currency that exists in the world.
I love this. Expand on that, please.
It's decentralized because while it's true that the Federal Reserve has the ability to generate dollars out of thin air, so does, there's a difference, of course, between a Fed dollar and a Euro dollar, but trillions of dollars are created outside of the U.S. Federal Reserve banking system by third parties, banks, other financial intermediaries, people outside the U.S. that have no relationship to the banking system whatsoever, invoice in dollars, contract in dollars, and all of that is a source of dollar demand because those debts need to be repaid in dollars, which is why the Fed operates swap lines. And so
with other central banks so they can exchange
exactly. So it's a very sticky system. It exists, again, it's decentralized. There are huge network effects associated with the dollar. So we recognize the network effects with Bitcoin, the power of those network effects. We recognize the network effects in gold. We don't seem to recognize those same network effects operating in the dollar-based system.
That's really interesting.
And it's very difficult to displace those network effects. It's also very difficult to scale a currency. And the idea that the BRICS currency could compete with the dollar is so asinine that I haven't even done the work to investigate further the details of it. And you can just think of it, I mean, if there's ever going to be a competitor to the dollar, it would be something like the Chinese renminbi. The BRICS currency is an association of international countries, some of which are geopolitical antagonists like India and China.
Not the best of friends.
Not the best of friends. Permanent, long-term divergent interests. The idea that this group of nations can come together to do what the European nations couldn't, which had a common security architecture, which had a common marketplace.
Fiscal union.
A fiscal union built over decades of treaties. That and a common sort of geography, that these countries couldn't make it work, but that the BRICS are going to make it work, that Brazil, Russia, India, China.
And the other thing is in the network, thinking about the network effects, part of that is the legal system that we have. And you and I were talking about this earlier, that if you're an investor in a Chinese company that goes bankrupt, what is the liquidation process? What is the bankruptcy process? Do you trust the rule of law there? And then you multiply that. You mentioned companies doing contracts in dollars when that might not even be their home currency. It's all kind of buying into this notion that there's somewhat of a fair playing field in the U.S. In the West, can that be replicated somewhere else?
Absolutely. So That's the other important point, which is if we acknowledge that the idea that there's going to be a BRICS currency, and again, I really don't understand how this ever got any traction, but regardless, other than just general dollar FUD, the real potential competitor is China, but that requires, as you said, both for people to trust their legal framework, a country that, let's say, can just put the head of the biggest company, the biggest tech company, Jack Ma, in prison or somewhere, disappear him for a period of time, take his assets.
Right.
It doesn't make you feel very safe. But also they have to open their capital account, they have to liberalize their financial system, or they could go the route that they're trying to go, which is to digitize the yuan in terms of a CBDC.
And just look what happened with the DD IPO. There were investors who were sitting on some profits, and then all of a sudden, DD, which had listed in the U.S., Chinese regulators forced them to delist in the U.S., and people got a big fat red marker in their account.
Yeah, I mean, again, the dollar has been. There's a really great book, actually, I recommend if people are interested in. There are actually a few great books, but one that comes to mind is it's a biography of Charlie Kindleberger, but it's really a biography of the dollar and the internationalization of the dollar, written by Perry Merling, which tells this story because this was a long process and it takes a long time to happen. People don't just adopt a currency overnight. Again, the Chinese strategy for displacing the dollar, to the extent that there is one eventually, is the digital RMB. It's very much in the vein of a CBDC. It includes the digital Silk Road infrastructure and this idea of sort of building out. It's very Chinese in that sense, but that's a long ways from happening, and it's not clear that it'll ever happen. The dollar could be around longer than the U.S. empire could be around. It has its own independent effects, just like English. People speak English as an intermediary language because it's convenient, not because anyone imposed it on them. It's similar for the dollar. In many ways, the future of the dollar is dependent more on what the U.S. does to undermine it than it is on other countries' willingness to divest themselves of it.
So USD forever? What's the US dollar's biggest competitor?
Nothing is forever. Wasn't there a song, something like that? Nothing is forever.
Diamonds are forever.
Taxes are forever.
Yeah.
They say taxes are forever. Diamonds are forever.
Crypto? Could that be the new?
Diamond hands
Maybe
are not
Bitcoin
forever.
Could
Certainly, if you're
Bitcoin?
transhumanist, you're banking on that.
Well, yeah, could
If you're cryo-freezing your head and hoping to be regenerated in 100 years, like
I don't have that kind of money, so.
Is Bitcoin the future for the whole world?
I don't know. I will acknowledge that I dramatically underestimated the network effects of Bitcoin. I was one of those folks who was looking at blockchain, distributed Nakamoto consensus, and thinking that, okay, this is a great initial horse and buggy, but there's something that's going to come along that's going to displace it. Again, this requires a larger conversation, but I think part of the reason that hasn't happened in crypto is because the incentives aren't aligned with development. The incentives are aligned with the pump. And
Kind of gets
driving
back to
number
the
go up.
financial nihilism. Let's talk about the fiscal position in the United States, which kind of ties into the dollar. But we've seen the pressure on long-term yields since the election, and part of that is just the anticipation of the U.S. having to issue a lot more debt. I don't know that it's anything new, but the exact strategy of how that comes about will be different. What do you think about this?
I think there is a concern because the Fed is now. I don't want to use the word prematurely. The Fed is preemptively cutting interest rates, despite the fact that inflation hasn't returned to target, which does seem to be incompatible with or inconsistent with the view that they're data dependent on concurrent data. If you are of the mind that the Fed is always steering with the rearview mirror in mind and lags are long and variable, you could make the argument that they're getting ahead of something. But what if they're not? And inflation persists or begins to rise, then the Fed is caught in a really difficult situation because they've given forward guidance that they're cutting interest rates, but now interest rates on the long end are going up, and the risk is that they could lose control of the bond market. And what if you saw a 50, 100, or more basis point move on the long end? That significantly tightens financial conditions because credit markets take their cue more from the long end than from the short end. And then what does the Fed do at that point?
Sounds like a long conversation with the bond vigilantes that we will have at some point in the future and check up on that. But I want to get to today's Who Wore It Better? We've got a contest that concerns the very fate of humanity. Will it be good or will it be bad? It will be topian, but will it be utopian or dystopian? So on the utopian side, we have the dreamers, dreaming of a world where technology is humanity's ultimate tool for progress. AI solves everything, from poverty to climate change to human sickness and aging itself. Immersive tech revolutionizes education and entertainment, and somehow we walk on Mars without first blowing up Earth. On the other side, we have the darker dystopian view. AI steals jobs instead of creating them, exacerbates the wealth gap. Critical life-saving treatments go only to those able to afford, the rich, and a new generation decides to check out of the physical realm in favor of the metaverse en masse, closing the chapter on humanity as a species that thrives under the light of the sun and of the moon. Dimitri, future of humanity, utopian or dystopian?
Oh man, that's a difficult question to answer. I think, this is a topic that I've explored quite a bit on my podcast from different angles. I think the thing is that if you were to do a thought experiment and go back 100 years, better maybe 200 years, and bring a person forward from that era, you can make the argument that person would rather die than live in today's world. That everything would seem so obscene and alien. Signage. I mean, when electric lighting first came into Times Square, it was obscene. People were shocked by the sight. They found it to be an assault on their senses. And I think that the reality is that the human experience changes. What it means to be a human being in the world changes over time. And the question for me is more, will that change happen so fast that our children will live a life that is largely unrecognizable from our own? And you can make the argument again that there were periods where this did happen, maybe during the Industrial Revolution, during the period of the railroad, certainly for the natives in the plains who saw the buffalo extinctions and the trains cutting through their lands. Something similar may be happening in our current world. We spend so much more of our time online. And that also in some ways has an effect on undermining our democracies, because so many of the public conversations we have that filter through the media happen on servers that are controlled by private platforms. And there are a lot of people that have written about this. A great book that I would recommend for folks is Shoshana Zuboff's Surveillance Capitalism. And she was on the podcast years ago to talk about it.
Hidden Forces, by the way. Everybody check that out. So, I'm sorry, was it utopian or dystopian?
Yeah, he didn't say.
I think I'm not trying to give you a cop out here. I would say I'm going to bet on it being utopian. I believe that we can figure out the challenges that we have to face. But we might go through a dystopian period.
Gotcha. So a little bit of a bump in the road, but long term, A-OK. That's what I'm going to bank on.
I think that too. I think the problem is like when people forget social skills more, like when everything is done behind the computer. I know. Or
the
like
pandemic.
Or like with ChatGPT that you can, get a little lazy and not learn how to research yourself. You could argue that this is just the future of research, so why would you fall behind?
Well, that's a really great thing, bringing up ChatGPT and LLMs and AI. And I've thought about this too. Again, I think technology does make us lazy. When used properly, it can also make us it can help us specialize. So if you depend on ChatGPT to give you the answers, well, you're going to get worse answers because it hallucinates, at least current models
It does for me sometimes.
Yes, it hallucinated a little bit there, even with my bio, even though I was happy to see that it properly ascribed credit to financial nihilism to me, which is a big win. But I think that where ChatGPT is potentially explosively powerful is when it's working with an interlocutor who knows how to ask the right questions. So I think we're in an era now where we can get answers, but still the questions elude us. And people that are very smart, educated, capable of asking the right questions will be in a position to provide better answers than they were before, which is why I always recommend, I have people that are listeners to podcasts who are in high school and they're looking to go to college, and they ask me what should they study, and I always tell them philosophy and history, dual major. Learn how to think and then collect a set of data that you can analyze. And that is, I think, the future. I think I would love to see philosophy taught more, epistemology taught more in high school.
Guess what? 24 minutes has elapsed once again, so we got to close things off here at Stocks in Translation. Be sure that you check out all our other episodes on the Yahoo Finance site and the mobile app. We're also on all your favorite podcast platforms. Just to recap, that's YouTube, Amazon, Apple, Spotify, iHeart, Podtail, Pod Paradise, and more. It's all for now. Keep your dial tuned to Yahoo Finance.